Hello and welcome to another briefing from Kuits Solicitors in Manchester. I'm Robert Levy, the Executive Partner of Kuits, and I'm joined today by two partners from our private client tax team, Paul Bricknell and Elaine Roche. Hi guys.
Hi.
The Office of Tax Simplification reported this week, long awaited, and made some recommendations to, I suppose, help the government get back some of the billions of pounds that it's put into the economy as a result of COVID support. So what have they recommended?
Well, there's a whole raft of suggestions in there. They really look at every area of capital gains tax, but I think the main one and the headline grabbing one is the idea of aligning the tax rates with income tax. Currently, you pay capital gains tax. I mean, and there are four different rates: 10%, 20%, 18%, and 28%. So the idea would be we get rid of all of those, and you are taxed at exactly the same as income tax. So that would be 20%, 40 or 45. So effectively, it's doubling the rate at which tax would be paid. So it's quite big news, and quite big figures for those who have to pay the tax.
And what normally happens when the OTS reports? Does the government normally implement it as night follows day, or is it a selection process?
Oh, it's very much a selection process. I think they throw a lot of stuff out there, and some of it sticks, but I would guess probably less than half it in reality sticks. And there'll be a lot of things in there that just won't see the light of day. And I suppose there's an element of, if we present the worst case scenario within the OTS report, it won't feel quite so bad when we implement 3 of the 11 proposals.
And if they do implement them, when will they do it?
Well, again, unsure. That the earliest will be at budget date next year. However, that would stop any forward planning, so it happens that day. However, that would make the tax calculations very difficult because you'd be changing a tax rate during a tax year. So most likely would be 6th April following budget day.
And how will it impact clients? Because I'm guessing anybody who's holding assets of value, whether it's property or shares in a business, could be potentially very seriously impacted.
Mm-hmm. Yeah, I think the ones we will most commonly see will be clients selling businesses or selling property. They are the ones that have built up businesses, built up property portfolios or whatever, looking to retire maybe, and suddenly where they thought they were going to retire and have a pool of X, they're going to have X less the additional tax, and it's going to be quite a big impact for them.
Does this mean that they now have a window of opportunity when they can potentially prepare for this or plan for it?
Definitely. I think, we've got a window of opportunity. I think for people who've got deals on the horizon, I can certainly see a lot of people bringing the deals forward. And of course, that will give buyers a bit of a leverage to say, well, we want a bit of a low, if we get this deal done before budget day, we want a bit of a lower price. So I certainly think people will bring things forward. And then after that, you're going to have planning opportunities.
And in terms of planning opportunities, I've no doubt that there will be all sorts of weird and wonderful schemes out there designed to try and help people avoid increased liabilities. That's not the kind of planning you're talking about, is it?
No, and I'm very much of the view that clients should do bespoke planning. It shouldn't just be a one size fits all, scheme being touted to as many people as possible. There are legitimate, tried and tested methods of mitigating taxation which have been approved by the revenue in the past and will be in the future. And it's making sure you're using, almost the low hanging fruit often to mitigate taxation rather than trying to be overly clever.
And in terms of anything, is there anything that the Office of Tax Simplification has said that is off limits?
I don't think they have at the minute. It's all, they've really covered everything in there. I suppose the only thing that seems to be quite protected is the capital gains tax relief on the sale of your own home. So second property is absolutely still up for grabs, but they do seem to recognise that, if you are selling your home, that should still remain exempt. I guess the other thing is they have looked at, they do consider owners of businesses, and they accept that you work all your life, and often that's when you come to retire, that's part of your pension pot. However, they don't think the rules for the entrepreneurs relief do what they should, and so they're looking more at going back to a similar scheme to the retirement relief that they used to be. So again, two things that are there, but we'll see whether the government takes up those recommendations.
And how does this capital gains review, as I think it's been called, how does it impact on inheritance tax?
I mean, they're completely separate, to be honest, capital gains tax in lifetime and inheritance tax on death. However, one of the things they did identify is that on death, currently, you get a capital gains tax free uplift. So if you've lived in your property for 50 years, you bought it for £10,000, it's now worth, who knows, close to £1 million. Whoever inherits that inherits it at £1 million, and they don't think that that's fair. So they're suggesting that actually you would inherit the base cost as was paid by the person who bought it. However, the issue there would be you could end up paying inheritance tax at 40% on top of capital gains tax when you sell it at potentially 40% as well. So that really strikes me as something that will need to be looked at very carefully in any implementation that comes about.
So for anybody watching this who regards themselves as potentially in the target zone for these tax hikes, I'm guessing what you would do is look holistically at their affairs and recommend ways in which they can try and protect themselves from this, even though at the moment we don't completely know what will be implemented. Is that right?
Absolutely. I think you've got to start looking at it now, and whilst we don't know what will stick, I think you have to accept there will be an uplift in taxation in some way. It's only a question to what extent and actually quite how it's implemented. So I think you have to accept that that planning and forward planning is important. I think and I would go back to basics and say, if you're acquiring a new asset now, think about the taxation on disposal in the future. When you buy it, what's the best way of buying it, rather than being reactive and trying to work out what you should have done when you come to sell it.
Good advice. Well, your details will come up at the end, so anybody who wants to contact us about this, I'm sure can call for an initial chat and see if they think that this is something they need to pay attention to. We know that there are only two certainties in life: death and taxes, and we now know that it's going to hurt either way. So thank you for that. I hope you watching have found it useful. We'll be back with another briefing soon.